All right. Good morning to you all, crypto ambassadors across the world. It's another wonderful day, and we are about to start our presentation or our lesson. And our edge, we share the link. I think we are 15 numbers now. Our edge, we share the link at least. Let's wait. Let's hit 80 people, 100 people. Then we start this morning lesson. So please, let's share the link. Share the link to your downlines, your team members to join. This is for activated members. Take notice of that. This is for activated members. If you bring in a non-activated members here, they will lag because we proceed in the lesson and we are going to move forward. And as a result of that, it is important for you to ensure you bring in all your activated members, all your team members, your downlines. Let them be here. Let your downlines be here so that they can also learn, right? So share the link. Share the link. Okay, so I think we can start. We are 61 in numbers and we can start. So we are not going to waste much time. We are going to begin today's session. Notwithstanding, I urge you to keep inviting your downlines, those of them who are supposed to be here. Invite them to be here because the progress of your business also, or the progress of your downlines also affect you. So ensure that always whatever thing that you are learning, your downlines too will do what will learn, will take part in such lessons. That will make your job or your work to be so easy for you. That will make the work to be so easy. But if you are the only person learning in your team, you are carrying a heavy load or a heavy burden. That is the reason why you are supposed to that has to do with knowledge. What in all training that has to do with knowledge, you would never exempt yourself and you won't exempt your downline from that meeting, right? Good. So today is Wednesday and we are having an interesting discussion on the futures trading. So far, we learned a lot about the futures market, how to trade on the futures market, how to set up a trade on the futures. And the amazing thing is that I've seen a lot of people trading futures too, and it's so interesting. The results and everything, it's nice. It's so encouraging. Yeah, so we need to progress in knowledge. You need to understand so that we can make more money, right? Good. And mostly what I've been saying is that the knowledge you make or the money you get in trading is as a result of the knowledge you have, right? So more money equals more knowledge equals more money. More knowledge equals what? More money. So therefore, if you want to make more money, you should need to learn more. And the more you learn and you understand and practice whatever you learn, the more you can make the money. That is how trading works. That is how trading works. So you need to learn more. That is the reason why such meetings are being organized by our leaders all the time so that we can all learn and understand. Okay, so let me share my screen for us to get to today's agenda. Let me share my screen for us to get to today's what agenda. All right, so I'm sure you cannot hear me, right? If you can hear me before I share my screen, let me know if I'm very loud and clear on the line. So if you can hear me, give me one in the chat. If you can hear me, give me one in the chat for me to know if I'm very loud and clear in this morning's session. If you can hear me, give me one in the chat. If you can hear me, give me one in the chat for me to know before I share my screen. Okay. You're saying loud and clear. It means you can hear me very well. Okay, then I can proceed to share my screen. Can proceed to share my screen. So let me share my screen for us to get to today's agenda. Okay. Mhm. All right. So I'm sure my screen is visible now. I'm sure my screen is visible now. You can see my screen now. Can you see my screen? Is my screen visible now? Very good. Okay. So let's start. All right. So we are discussing on futures trading. Last week we how to set up a trade and then also how to understand some of the some features on the trade setting. After you setting up your trade, we also did calculations, how to calculate for the point, the value of the asset. Now, before we proceed with today's agenda or today's session, you look at a breakdown key concept. Okay, a breakdown key concept in trading. So mostly you set up a trade and you see a lot of things like both in your exchange and then in Royalq. You're going to see a lot of things. So today, before someone is saying I can't see the screen. So before we proceed to the breakdown key concepts in the futures market, before we proceed with the breakdown key concepts in the futures market, I'll first proceed to have a little recap of what we've discussed about futures trading so far. I'll proceed to have a little recap with you on what we've discussed about futures trading so far before we proceed to the today's session. That is a breakdown key concept. So we will look at a breakdown key concept. So some of the concepts that you need to know and understand about the futures market, some of the concepts that you need to know and understand about the futures market. Can you all hear me? And is my screen visible? If you can hear me and my screen is visible, give me one in the chat. If you can hear me and my screen is visible, give me one in the chat. If you can hear me and my screen is visible, give me one in the chat. Very good. Very good. So please, if you can't hear me, I think you have to check your network or your connection. Okay. All right. So so far we've discussed more about futures trading. We've learned more, and we said when we talk of futures trading, when we talk of futures trading, we said futures trading is different from the spot trading. And what makes it different? What makes the futures trading different is as a result of the nature and not an ownership. Okay, the nature of the futures market as a contract and not an ownership. So therefore, we came to understand that the futures market, the spot market is an ownership of an asset. You buy an asset and you own the asset, but the futures market is like contract. It's a contract. We said it's a contract. So the trader sign a contract, and what makes it a contract is as a result of the leverage. So we employed all these terms here, leverage. So we said the reason why the leverage makes it a contract is that the trader needs power to or needs more money. But since you will need power to raise more money, they are going to leverage on your effort. And under normal circumstance, in our normal understand about leverage, that is something that raises your power. Okay, something that raises your power. So, for instance, we said in team building, when we see someone is building a team, it simply means that the person is leveraging. Since he wants to earn $1, he wants to get more people who can work with him for them to earn $1 together. That is the meaning of what leveraging. So in this case, when it comes to trading too, the leveraging here simply means you need more money to trade, and the system is helping you to raise more money. So assuming you have $1 and you go for 2x, the 2x is your leverage, which simply means you want to use $1 to raise $2. That is one times two, giving you what two. Even though you didn't have $1, you didn't have $2, but because of the leverage, you are using $2 to trade. So this is what makes it a contract. So the real money, your real money is $1, and then the leverage money is what is $2. This is what we discussed in our previous session. And we said after getting your leverage, you would also follow a prediction of the market. After getting your leverage, you would also follow a prediction of the market. Now, when we talk of the prediction of the market, every market follows a prediction, either it's rising or it is falling. In this case, we give a term that when the market is rising and the trader believes the asset is going to rise, that is the belief of the trader. We said when the trader believes the asset is going to rise, the trader goes on long in the market or buy. This simply means the trader believes that the contract that he has signed in the market is going to rise. That is the reason he's going for that contract. On the other hand, if the trader also believes that the asset is going to fall or drop in value, the trader goes on what on short or sell. So we explain what we mean by long, what we mean by short, and what we mean by leverage. Are you following? Are you following? Are you following? Are you following? Very good. Very good. So we discussed this and we got the understanding very clear that this is what makes futures trading to be different from what? From the spot trading. This is what makes futures trading to be different from the spot trading. And we also proceed to discuss that. Now, because it is a contract, now in every contract, you either win the contract or you lose the contract. So when it comes to the futures trading, what makes it a contract we will explain. Now, what are the pros and cons in the contract? What are the pros and the cons in the what? In the contract? We said when the trader wins the contract, he signs a profit. He gets his what? His profit based on the what? On the leverage. In the same manner too, when the trader loses the contract, he uses his money which was used as the leverage or which gave him the power to leverage the amount as what collateral. Hmm? As collateral. That is what we discussed. And why did we say it's a collateral? Because they are borrowing you money. And the money that they are borrowing you, you are using your initial capital, which is your real money, as a collateral to that leverage they are giving you. So in the case of this, we give an explanation to that. That this futures trading happens in even real time situation in our bank because most people go for loans at the bank and they see such. So we said let's assume the trader wants to go on long on this asset let's say Solana. The trader wants to go on long. Now, going on long, you have $5 and you want to choose 10x. This simply means your real money is $5, your leverage is 10x, which gives you a leverage of $50 as your position amount. And $5 becomes your margin. $5 becomes your margin. In this case, we said when the market goes in favor of your direction, let's say +1. When the market goes in favor of your direction +1, you make profit based on this, which is going to 10% of what? Of this amount, which is the $5. And in same manner, when the market goes against you -1, you lose money, which is also the same and 10% of this same amount of money. So by the time the market will go against you, so this margin gets finished, Binance would never allow you, the trader, to use their money to continue trading when your money that is used as collateral is finished in the market. And as a result of that, they will terminate the contract because the money you are using to trade is finished. And since it's finished, they will not allow you, the trader, to use this money to trade because this is the collateral amount. And once there is a breach of contract, that is all. It simply means the money is finished in the market and you are done, right? You are done. And so when you are done because your money is finished, at that point in time, we call it liquidation. Liquidation. It simply means the money you use as collateral has finished in the market. And once the money gets finished in the market, the term that we used to call that is liquidation. You will be liquidated. It simply means the contract will be terminated. And when the contract is terminated, we use the term liquidation because now you are no longer going to get that money back because you use that money as collateral and you couldn't succeed in your journey. And as a result of that, since you couldn't succeed in the journey, now you have to go for pay for the penalties, which is using it as a collateral. Now, we said this is a brief or this is explanation about how futures market works. This is explanation about how futures market works. So we also take time to discuss on how advantageous or how beneficial using the bots to trade becomes. So over here, we discuss that the trader can go for a strategy to ensure always he's being secured in the market. And those two strategies, we discuss them as one. The first one is opening margin call or margin call. So let me use the word MC, okay, for margin call. So MC, that is margin call. And then the second thing to do is to hedge your trade. Is to hedge your trade. Now, all these two terms, all these two things are important so far as Royalq is concerned. All these two terms are important so far as Royalq is concerned. Are we learning? 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 Very good. Very good. Very good. Now we can proceed. Now we can proceed. So back to the classroom. So we discussed about margin calls, and since we've got fundamental or more knowledge about margin calls, how to set up a trade, we discussed in sports markets. And we said we are going to transport the same knowledge from the spot market to open in terms of opening what margin call, right? So why do you need to open margin calls on futures trading tool? So this is what we discussed. Now pay attention to this. Pay attention to this. So we said, now assuming you are on long, if you are on long, we discussed that the market goes against you in short. So this is your direction, and the market too is having this direction. Let me clean this pen. This is your direction. You are on long direction, and the market too is on what? On short direction. So in this case, since you are predicting to rise and the market too is also going against your direction, the easiest way for you to overcome this is one, by opening what margin calls. And this is how it works. Let's assume this is your first entry. This is the entry. And your liquidation rates also is around this line. This means in between this entry and the liquidation rate, a lot is going to happen. So before you can be liquidated, you start have the trade here and you're expected to rise here. So for the trade to reverse, so it gets here for you to be liquidated, a lot can happen for you to be saved in the market. And that is what we term it as the margin call. So in this case, you the trader, what you are supposed to do is to open more what? Is to open margin calls to secure yourself in the market. And what is the benefit of opening the margin calls in futures trade? Now, this is your first entry. So after opening another margin call, you fill this gap. So instead of having this whole space empty, you are filling the gap there. Okay. And I will explain something to you now. You are filling the gap. So you fill this gap. All right. So you fill this gap. Since you fill this gap, you've been able to create what we call new average price. Okay. Over here, you fill another gap here. You've created what we call new average price. So this time around, instead of your liquidation price getting here, because of you creating new average prices all the time, you create new liquidation price too. You create new liquidation price. So the whole space has been filled enough, and this time around, your liquidation price is no longer from this place to this place, but rather here to here. So this brings us to another discussion that we have on average what? Average prices. And that is the importance of opening margin calls. So if you open margin calls, it helps you to create new average prices or average price. Now, this is what we discuss about the average price. Mind you, some of this knowledge, we have it on the sports market already, and we are just doing transfer of knowledge. So if you are using the boat to trade on futures markets, what the reason why the average price matters is because of your liquidation price. That is LP. Your LP. That is your liquidation what? Liquidation price. So let's assume you bought Solana at 130, or let me use 150. Anyway, 150. You want to go on long. Now, your liquidation price is, let's assume your liquidation price is 140. This means once Solana drops, instead of, because you are going on long, once Solana drops to 140, your liquidation will be triggered and you'll be out of the market. Right? In this situation, if you are opening margin calls, so Solana drops to let's say 148, you buy another asset, or you buy more in addition to your 150. You've created a new price here.
So this time around, your price of buying the asset is no longer focusing on 150, but rather 140. So 140 becomes your new average price. And since you bought new assets here at 140, your liquidation price too would change from 140 to another value. Your liquidation price would what? Would change from 140 to another value. Now the next thing, now it dropped from 148 to 145. Now, mind you, the 140 as liquidation price is only for this 150. And the more it keeps dropping and the more you keep buying, the more it keeps creating new liquidation what? Liquidation price. Are we learning? Are we learning? Are we learning? Are we learning? Very good. Very good. Very good. Now, let's proceed. Let's go back to the classroom or the board. Okay. So now you've understood the concept of the average price. You've understood the concept of the margin calls, how it benefits the trader in the in using Royalq. You see, so if you understand this, you know that Royalq boats is exceptional when it comes to trading. And I love using these boats very well because it's exceptional in strategies like we are going to discuss today. So the more you create new average prices, the more your liquidation price also changes. Do you get the idea? We said aside that, you can also hedge your trade. You can also hedge your trade. So you have two options: to open more margin calls or to hedge your trade. Now, when we talk of hedging your trade, what does it mean? We said that you can go on long and the market will reverse to go on short. You can go on long and the market will reverse to go on what? On short. Now, when you are long and the market is on short, you can open more margin calls. On the other hand, there is another strategy that you can do or you can go by, that is hedging the trade. When you say hedging, it simply means going on opposite direction. So in futures, unlike the spot market where you buy low and sell high, so you buy at one point and expect it to rise. This time round, you are on long and the asset too is dropping. Which is when it's dropping, it simply means going on short. So what the trader can do is to short the trade whilst leaving the long trade in the market, and then you short the trade. So by the time the market will reverse to go on long, for your long trade to be triggered, you would have made profits on the what? On the short trade. You would make profits on the short trade. So sometimes there are instances where this week, I think, um we learned something like that, and you realize you even make profit. Sometimes by the time you realize, on your short trade or on your hedge trade, you would even recover profits that is in the markets. That is the margin trade or the margin amount that you are using to trade. You realize that your profit has covered it up, and which will also help you to raise more money as profits to open what? More margin calls. That is when the coin goes very down against your trade. So we said when we talk of the hedge mode, with hedge mode or hedge strategy, it's mostly for advanced traders. And that is the reason why Rare Q2 has implemented that strategy for you. So let's assume you are on short trade. Okay, you are on short. So you are on short. Now it simply means the market is supposed to drop, but rather it is rising. It is what? It is rising. And when it is rising, it is on long position. So you can choose to open long position. And since the market keeps rising, you will definitely make profit on the long position, whilst your short position remains in the market. When the market reverses back, or when the market reverses, it will sell. So there is a common example. For the past 3 weeks, we've experienced something in the market. For the past 3 weeks or 2 weeks, we've experienced something in the market. From nowhere, BTC began to rise. From nowhere, BTC began to rise. Now, if I say from nowhere, we are all seeing BTC at the value of 87K, then it dropped to 70 something, right? 77 or 70 something. Is it 79? Now, after dropping here, it was taking time to rise again. A lot of people were shorting the trade. A lot of people were what? Were shorting the trade. It simply means the trade was in more supply zone as compared to the demand. And in the futures market, we said when the market is dropping, you short it. When it is rising, you long it. So a lot of people were shorting this trade or the market. All of a sudden, we saw that it began to rise. So at a point in time, I was having short trade on Solana. Okay. And then I realized that Solana rised from 130 all the way from 130 to 156. Now, after this, it simply means those who were short longing Solana would profit, and those who are short Solana would be in floating, right? So, assuming I've opened a trade on short on Solana, and now the Solana keeps rising, all what I can do as a trader is to long the trade, whilst I remain silent on the short trade. So far as I'm not being liquidated, I'll continue to make profits on this long until the assets drops again. And just yesterday, about 3 days ago, from last 30 days till yesterday, we saw Solana drop to about 140, 142 elsewhere before it reverses back this morning. So this is a simple understanding of hedge mode. So if you are hedging your trade, you realize that it's both profitable, just like opening margin calls, because the trade will drop, it will rise. So far as an asset continue to drop, rise and drop, you are free to go in the market. You are free to go in the what? In the market. And that is what makes futures trading to be exceptional or different from the sports trading. Right? Good. Now, we said because of these strategies in the market, traders are so familiar with it. Traders understand and they can have their peace of mind because though we've understood what we mean by liquidation and we've embraced it, what Royalq does is at least we can assure ourselves that our chances of making profit in this market is 90% chance of making profit, 10% chance of what? Of losing. This means you could make more money here as compared to what? Losing your money. That is the idea. That is what? That is the idea of we implementing or bringing in the advanced market, that is the futures trade. Now, are we learning? 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 Okay, okay, okay. All right, so now we can proceed. Now, you've understood all these aspects and we can proceed to have to continue. We can proceed with what we have to do. We'll talk about that. So if you have any question, don't worry. We'll give you the floor to ask your questions. Now, there are some few things that okay. There are some few things what we call sometimes questions. Some people ask questions on after setting up the trade on Royalq. When you go into your exchange, After setting up the trade on Royalq, when you go into your exchange, you may not you may see the trade there, and I have to take time to explain the trade that you see. And there is what we call B there is what we call BSD in trading. Using Royalq, there is what we call BSD. And when we talk of BSD, we mean both strategy, both strategy data, both strategy data. And when we talk of both strategy data, it simply means because it's a bot or it's an AI, it presents the data that it presents to the trader may be a little different from the data the exchange will do it or presents, because over here it's an inbuilt strategy. So just like margin calls or martingale, okay, just like martingale is a BSD, that is bot strategy data. Because when you go into your exchange, you are not going to see martingale there. But when you come to Royalq, you are going to see martingale. That is what we call it BSD, bot data or bot strategy data. You see, so when you set up your trade in Royalq, you will see the record, the trading record there. But when you go into your exchange, you may see something slightly different, which is though the same trade that you've opened. And mind you, if you don't open the trade in Royalq, there is nowhere it will reflect in your exchange. Yet it will reflect, and it may seem something slightly for you to understand. That is the reason why I have to take time. I said this morning we will do a little about breakdown key concepts. So after setting up your trade in your exchange and on Royalq, there are few things you need to know. There are few things you need to do. What you need to know. So let's go to Royalq. Let's go to Royalq. So, and then our exchange, to have more view on the BSD we are talking about, both data what strategy. So let's go to Royalq. Are you following? 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 Good. All right. So let's proceed now. So on Royalq, we set up a trade on Royalq. Then it's reflecting in our exchange. So this is our Royalq. These are Royalq. Hope you can see my screen. Can you see my screen? Okay. All right. Is it visible now? Is my screen visible now? Is my screen visible now? Is it visible now? Okay. Oh, some are saying no, some are saying yes. Can you see? I can see my screen. So can you see my screen too? I can see my screen. Can you also see? Yes, I can see. You can see my screen. So can you also see my screen? All right. Anyway, let's proceed. Somebody is asking what's on your screen. Anyway, yes, my screen. I can see what the icons on my screen. Hmm? Yes, it's visible now. Let's proceed. So let's go to Royal. This is our Royalq. Okay. So let's go to strategy. We may see one and trade them. So let's use that one. Good. Now, when you come here, you are seeing what we call position amount, average price, unrealized P&L, position quantity. Okay, you are seeing position amount, average price, unrealized P and what and L, and then position quantity. Meanwhile, when you go into your exchange, you're not going to see position amount, you're not going to see average price like that as you are seeing here. So you need to understand what it means in your exchange and how it works for you, right? So let's go into our exchange. Let's go into our exchange. So let's see. Okay, we have this trade here. All right. So this is our trade. Now, when you come here, you are seeing the same trade that we have in our exchange. Okay, on Royalq, we have the same trade here. Now, over here, you are seeing size, the size of Biko. You are seeing P&L in USDT. You are seeing entry price and mark price. So that is what we are going to talk about. The breakdown key concepts. The breakdown key concept. So you are seeing entry price and mark price. And what is the entry price and the mark price here? So on Royalq, instead of you seeing entry price and mark price on Royalq, this is what it means. Now let's go back. Let me use the board to explain to you. So you'll see something like entry price and then mark price. Now, when we talk of the entry price is the average price of the assets, the average price of the what? Of the trade or of the assets. And we all understand what we mean by average price. I've just explained average price to you not long ago. So anytime you see entry, that is the price at which we bought the asset or we set up the trade. Either a current value of the asset or a preset value of the asset. That makes it the entry price or the average price. So if you set up a trade, you see average price on Royalq. In your exchange, you will see entry price. Now, so the entry price is the same as the what? As the average price. The entry price is the price at which you bought the assets. And the average price is also the price at which you bought the assets. So your exchange gives you that record as what? As an entry price. Also gives you the data as what? As an average price. That is what I said we call it BSD. That is bot strategy data. Bot strategy what? Data, BSD. So in your exchange in Royalq present those information to you as an algorithm present information, right? And then your exchange to present those information to you on exchange time reading. Okay. Now the next thing is what? Is mark price. The next thing is mark price. So now you've understood average price and mark price, and I'll ask you a question very soon. So pay attention. The next thing that you see is mark price. Now, when we talk of the mark price on Royalq, you come here, you are seeing current price. Let me tap on this trade. You are seeing what? Current price. The current price of the assets is the mark price of the assets. So in Royalq, you are seeing mark price, you are seeing current price. In your exchange, you are going to see mark price. In your exchange, you are going to see what? Mark price. So instead of seeing current price in your exchange, you are going to see mark price. Do you understand? Now, is average price the same as entry price? Is average price? Oh, what is this? Is average price the same as, where is the chart? Okay. Is average price the same as entry price? Is average price the same as entry price? Give me the answer in the chat box. Is average price the same as entry price? Is average price the same as what? As entry price? Is average price the same as entry price? Good. Very good. Very good. Very good. Very good. Now, my next question. My next question. Mark price is not the same as current price, true or false? Mark price is not the same as mark price is not the same as current price, true or false? Mark price is not the same as current price, true or false? Mark price is not the same as current price, true or false? Mark price is not the same as current price, true or false? Very good. Very good. The answer is false. So good. So now you've understood. So anytime you come into your exchange, very good. Anytime you come into your exchange and you set up a trade, you know what it means. You know what it means here. So if you go to Royalq and you open up your trade, you know you have your average price, you have your current price there. And once you get into your exchange, you are not going to see average price. So someone asks me, where do I see my average price? Where do I see my average price? So now you've understood that the average price is the same as the entry price, and the mark price is the same as the what? As the current price. Now, the next thing is, someone also asks, what about liquidation price? Because we've been talking about liquidation price. We've been talking about liquidation price. What about where do I see liquidation price in my Royalq? So when you set up the trade, you are not going to see liquidation price in what? In Royalq. When you set up the trade on Royalq, you are not going to see the liquidation price in Royalq. So come into your exchange again. If you want to see your liquidation price, over here you can see we have liquidation price here, and this is it. Exchanges like Binance, you can easily detect your liquidation price. Sometimes those using OKX, if OKX, some of the asset that you set it up, you are not going to see your liquidation price, and this is the reason. So let's click on it and see the reason. The any reason to that? Okay, so they said estimated mark price of BICO USDT perpetual when the maintenance margin ratio reaches 100% and liquidation is triggered, assuming the mark price of the other symbols remain relatively unchanged. The estimated liquidation price may vary and is for reference only. So over here, what they are trying to tell you is that the liquidation price of this particular trade varies, which simply means it's not constant. It changes with time. That is the reason why they do not give you the liquidation price. Now, uh, if you want to know the liquidation price yourself, to know where you can be triggered in the market based on your liquidation value, you can do the calculations yourself. You can do what? You can do the calculation yourself. And I think maybe in our next session, you look at how to calculate for liquidation value, how to calculate for position size, how to calculate for profit and loss. So that will be tomorrow morning if God permits. Sorry, tomorrow in the evening. So you need to come along with your lesson notes to write up all those information. Now, how do you calculate for the liquidation price? How do you get to know your liquidation price in instances where the liquidation price is not given? In instances where the liquidation price is not given, let's go back to the board. So let's clean this. Mhm. Now, we said you want to know your liquidation value or your liquidation price. After setting up your trade, you would want to determine. Mind you, you are on advanced lesson. You are trading on advance because futures market is an advanced trading. So if you want to further up your knowledge in futures, this class is purposely meant for you. Do you get it? So now you want to know your liquidation price. It depends on the direction. If you are on long, the liquidation value is different from if you are on short. So if you are on long and you want to calculate for your liquidation value, this is it. So if you are on long, you can calculate this by multiplying your entry price times bracket 1 minus 1 over your leverage, which is L. Let me represent the leverage by what? By L. This is what is going to give you your liquidation value when you are on long position. This is going to give you your liquidation value when you are on long position. So your entry, that is the average price of the asset, multiplied by 1 minus 1 over your leverage. And you know your leverage. I said for you to go above, at most, let your leverage be 5x. If you want to stay and win more in the market, let your leverage be what? Be 5x. So if you want to know your liquidation value or your liquidation price, your entry price multiplied by 1 minus 1 over your leverage, that will give you your liquidation value when you are on long position. That is when you are on long what? Long position. On long position. Now, if you are on short position, if you are on short position, if you are on short position, your entry price multiplied by brackets 1 plus 1 over your leverage. So inverse of the long is the short. That is 1 minus 1 over your leverage. And then the short is 1 plus 1 over your leverage. So this is the rule, or this is the formula you can use to calculate for your liquidation what? Your liquidation value. Are we learning? Are we learning? Are we learning? Are we learning? Okay. So now you know how you can calculate for your what? Your liquidation value. This most of these calculations will be done if God permits tomorrow in the evening. Most of these calculations will be done if God permits tomorrow in the evening. So tomorrow is Thursday, and you have to try your best to join the evening session. Okay, that is where you handle these calculations. Now, I said if you want to know your liquidation price or your liquidation value, if you are on long, if you are on long, you come here, your long entry. So the entry price of the assets multiplied by 1 minus 1 over your leverage minus 1 over your what? Your leverage, which is, let's assume the leverage is L, and an inverse of it. So if you want to know your liquidation value on short, it's your entry price multiplied by 1 plus 1 over your leverage, which is L. So whatever your leverage is, 1 over your leverage. So all what you need to know, and this is not difficult. You don't need any special thing. You entered the asset at a particular price. That is your entry price. So that entry price multiplied by 1 plus 1 over your leverage. So let's assume your leverage is 5 or 10. So over that value, do the calculation and you get your liquidation price. That is in a case where the liquidation price has not been given or you want to know it yourself. That is it. Now, I think some people are beginning to run away. Some are saying, is this not trading? So where from this mathematics? Right? Anyway, so take your time. Okay. Now, I think I have to give you the opportunity to ask your questions because time is fast spent. I have to give you the opportunity to ask your questions. This meeting is being recorded, and at your free time, you can go there to do what? To watch the video again and then understand all the concepts. Now, someone is asking, so if you have any question, you can raise your hand. Or so, are we liquidated at once or in bits? Are we liquidated at once or in bits? Now, when we say liquidation, it simply means you have gotten to that point where your money has exhausted, and your liquidation price too has been triggered. Do you get it? So in this case, you get liquidated. So liquidation is not in bits. Before you get liquidated, it simply means you have gotten to a critical condition in the market. That is what it means. Before you get liquidated, it simply means you have gotten to a critical condition in the market. If you have money, there is no way you'll be liquidated. So you don't get liquidated in bits. It's once. Okay. All right. So someone is asking, at what point does liquidation happen? So liquidation happens eh, when your liquidation price is triggered. That is the reason I wanted us to we will take time to learn more about the liquidation price, how to calculate for the liquidation price. Do you get it? So liquidation happens when your liquidation price is triggered. Yes, so someone is asking the strategy set for sports can be work for future, especially on the margin calls. Yes, the same thing. Yes, so can you use margin calls and hedge mode at the same time? And when they both create a new average price, that's the your Binance reflects the new entry price. Yes, so over here you can use what is it called, margin calls and hedge mode at the same time. And of course, it is important for you to create margins for your trade. It is important. So, despite you want to hedge the trade, you still need to open margin calls. Do you get it? Despite you want to hedge your trade, you still need to open margin calls. Yes, and that will reflect on your Royalq. And that will reflect on Royalq. So, and what the bots create a new average price, that's your Binance reflected. So, it will reflect on your Royalq. That is the reason why I talk about the BSD, because we have bot strategy data. So, most of the data would reflect, especially in your Royalq, for you to see it. So when you are buying the margin calls reflect in Royalq. Do you get it? Good. So okay, if I've understood you perfectly, you mean with the hedging you can buy both long and short at the same time. Yes, that is what you mean. You can buy both long and short at the same time. That is what you mean. Okay. Okay, so let me see if someone's hand is up. Okay. Let me unmute you for you to ask your question. All right, you've been unmuted, so you can ask your question.
Yeah, good morning, Mr. Emmanuel. My
Good
name is,
morning.
I'm calling from Nigeria.
Okay.
You just partially answered my question. Yes, it is still on the hedging. Can someone use the same funds he long the trade to also short the trade? That is, if he wants to long and short at the same time, or if peradventure the market is going against him, can he use the same funds he used to long and short at the same time? That's my question.
Yes, it's the same phone. It's the same. The answer
Okay.
is simple. It's yes. All
So
right.
you are not in a kind of way opening a different trade. You are not in a kind of way opening with a different fund. You're rather doing it with the same fund.
Come again.
Which means if someone is on long and he wants to short the market, when he sees that the market is trying to go against him, he is not going to inject more funds to short it, he will rather use the same funds to short the market, right?
Are you talking about fund? Okay. Sorry. I mean, if you have the same trade, let's assume you have $50 on
Yes,
short. You cannot
yeah.
use the same $50 to long it. I didn't get the word right. Sorry. So you cannot use the same fund. That is, if it's $50 that you've used to long, you can't use the same $50 to short. Just like margin calls, if you use $50 as your entry amount, that is your first buy amount, you can't use the
Mm,
same $50 again to open margin calls. Or can you?
you can't.
Yeah, you can't. So it's the same thing. So
So
you can't use the same amount of the same fund that you've used to long to still short the market again. You still need another amount of money to do that.
so in such a situation, if take for instance you long the market before now, and this time around a rather different position, which is shorting the market. Take for instance you use a 50 USDT to long it before now, and you want to short it towards the other side, which means you still need another 50 USDT. So if at all the shorting is the one that comes into being, and on the side of the longing you go liquidated, uh, will your profit strike the balance between uh, the other 50 USDT that has been injected before now?
All right. So this is simple. Now, assuming you've used $50 to long the market, okay?
Yeah,
You've used $50 to long the market,
yeah,
and now you want to also go on shorts with the same with another $50.
yes.
Assuming you want to make 10% on the long, and you also want to make 10% on the short. Let's assume that is an assumption. If even if there is liquidated, you are still going to make profit on the short. You are going to get your capital plus profit. Do you get it? With that profit, that 10% would maybe cover a part of your losses.
Okay.
Do you get it?
Yes.
So you are not just, if it is if in this case, once you are discussing about the hedge mode, if you open two positions at the same time with equal capital, definitely, so far as you are going to make profit, that profit will cover a part of your losses in the other position.
Okay.
Do you get it?
Yes.
Very good. That
How
is it.
long does how long it take for a future trade to deliver in the market?
Yes, it
Because
depends on the signal. It depends on
from
the
the
signal in the direction.
from the previous class we've had, you said that it's easy for a trade to come by in the futures. That's the reason why I'm asking.
Yes. We use the term it's easily, and easily depends on on the signals. Do you get it?
Okay.
So that is it.
Okay. So
Okay, thank you. All right, the
on
next
the
person.
that's it. Thank you.
You're welcome. Okay, so Solomon, let me unmute you. Okay, Solomon,
Yeah, Emmanuel, good morning.
good morning.
Okay, thank you very much. My question is in relation to with respect to the hedging. Um,
Okay.
you made mention of the fact that in the event that you are in long and then maybe the market goes against you, so now you have to go short.
Yeah.
My question is that does that mean that in going on the short, you are actually going to start a new trade altogether, but on the same point?
Okay. All right. So is this yes, it's the same. You are setting up a new trade on opposite direction. Why are you setting it up on opposite direction? You are on long because you predicted the asset is going to rise. Now
Okay.
your prediction has reversed. This simply means there is possible opportunity in the opposite direction. And definitely we
Oh,
know if it is not black, it is red,
okay.
right? Or
Yeah.
it is white. Let me use the word white, black or white. So
Black.
if it's not long, it is short. and you've set
Okay.
up the trade, it's going on, instead of it going on long, it's going on short. It simply means
Okay.
there is possible opportunity in the short what direction.
Okay. Okay.
You
Okay.
get it?
Okay. Okay.
Very good.
So, if I get you right, that means clearly you have to more or less start with a new funds, completely new funds
Yes,
to
and
be
I think I
able
keep
to,
repeating that.
yes,
Yeah,
to be able to enjoy that opportunity in the market.
very good. Yeah.
Okay. 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 Well explained. But I would wish that that side of the topic, this particular topic you are teaching, I would plead with you that maybe you will zero in on that side a lot, because I see it as a gray area a little bit. Thank
All
you very
right.
much.
You're welcome. Okay, so all right. Let me unmute the next person. So Jonathan, you've been asked to unmute so you can talk. Jonathan, we are listening to you.
Uh, good morning, comrades. I was I was asking that any trading can he sell manually the trade has good
Come
profits?
again. Come again.
Can can, can a trader sell manually in futures when a trade has good profits?
You said, can the trade be sold manually when the person is in good profit?
Yeah.
All right. Yeah. So it's yes, and anytime, even on the spot market, when you are in profits, you can close it manually on your Royalq. Anytime, ensure you are doing
Uh,
that on Royalq in order not to face the challenge of abnormal order, right?
yeah.
So if you don't want to face
Yes.
the challenge of abnormal order, always once you are in a little profit and you think you are satisfied with that, you can sell it or close the trade on Royalq.
Oh, thank you, sir.
Yeah, you're welcome. Okay, so the next person, you've been asked to unmute, so you can ask your question. Isaac,
Yes, good morning, everyone, ladies
good
and
morning.
gentlemen. This is Isaac from Uganda. On the aspect of aging, if I had opened like a long position on the Ethereum, and then unfortunately the trade goes against me, and then I opened another short position on Ethereum. Now, as the short position is being successful, if it has closed, does the other long position still remain, or the whole trade will close, both long and short?
All right. So so far as the long continues to remain in the market and it has not been executed, it will still be in the market until your take profit is triggered. It will still remain in the market.
Okay, thank you very much.
You're welcome. All right. So I think let me go into the chat box. Can you run us through how we transfer money from spot to futures wallets, especially from Binance? Because sometimes, so I think on our first session, you can go on YouTube, you'll see that video there. Try and then watch that video. Okay. So is it possible to pause the trade in futures? No. When you pause the trade, it will close in your exchange. When you pause the trade, it will close in your exchange. Okay, so in your Royalq trade, you used 1x leverage. Isn't that the same as sports trading? No, if you using 1x simply means you are using your capital. Do you get it? Using 1x simply means you are using your capital. And over here, in my case, because the exchange that I'm using does not allow. So let's see. Because the exchange that I'm using only permits me to use 1x. So the last time I told you that when you are using OKX, you can't set you can't set the leverage. You can only change it in your exchange. So for instance, you come here, this is the leverage. So if I want to change the leverage, I can change it. You get it? I can change the leverage here, but not in what? Not in Royalq. It seems I've tried it several times and it's not working. But other exchanges like Binance, always you have to set it up on Royalq. Do you get it? So it's not the same, though. But notwithstanding, if you are using 1x leverage, if you are using 1x as your leverage, it simply means if your money is $60, it simply means you are using all the $60. But if your money is $60 and you are using 5x leverage, which is 5 times what? 60. Do you get it? If your money is 100 and you are using 5x, which is 5 times 100. So if we use 1x, that is 100 times 1 is still 100, which simply means you are using the same money, right? Okay, so let me look at the next question. So what happened to the trade when they both exhaust all the margin costs, and so it is still on? It is still on. If, for instance, the margin cost you set was 8 or 7, so after all the margin cost has bought in the market, so far as your liquidation price has not triggered, the fact that your margin cost has finished buying in the market doesn't mean that you are being liquidated. No. When the margin calls are done buying, so far as your liquidation price is not triggered in the market, you will still be in the market. So repeat the issue of pausing the trade in Royalq. I said when you pause the trade will automatically close in your exchange. When you pause the trade, it will automatically close in your exchange. All right. So I think there are no more questions to ask. So if there are no more questions to ask, we've learned enough this morning. If God permits, tomorrow evening, that is 9 o'clock East African time, and then also is it, yes, 6 o'clock Ghana time. We will still meet again to have more interesting discussion on what we've had today. So if God permit, tomorrow we will do more on calculations, how to calculate for your liquidation price, how to calculate for your P&L, how to calculate for your profit and loss percent, and others. So we will look at all those things so that we can learn more. So prepare to come here on time so that we can all learn together as well. So can I change the leverage in the boats with the trade when the trade is ongoing? Yes, you can change your leverage. You can change your leverage anytime you want to change your leverage. You can change the leverage, and especially if you are using Binance or other exchanges, but not OKX. If you are using OKX, the leverage can only be changed in your exchange. Okay. All right. So, guys, I think that is all for today. We've learned enough and we will continue another time. So, do more and do well to continue practicing and learning whatever we've been learning in our Zoom sessions so that you can also grow and understand every aspect of the market. It's your responsibility to learn more, and it's your responsibility to learn and focus on your business. So, do well to learn. So what does one do if they have a coin in floating loss for a long time and need to come out of it without making a loss? Yes, so you can open more margin calls. But we've given you the easiest way of it. We said the easiest way for you to overcome this is to hedge the trade. Hedging the trade simply means the market is going against you, and we now know that if you go on long, that is a possible way. Why don't you rather go on long? Do you get it? Well, if you open more margin calls too, it will help you create new average prices. Do you get it? To help you create new average prices. In the case, I don't know if you are talking about sports trading. I don't know your case if you are talking about sports trading, but this discussion is for futures traders or futures trading. So you can rewatch this meeting. Yes, on YouTube. Yes, on YouTube. So you can go and watch it on YouTube. Yeah. All right. So guys, I think that is all for today. We'll still meet tomorrow if God permits. We'll still meet tomorrow if God permits. I wish you all the best in your trading journey and have a wonderful day. All right.